The crypto markets get a major win as Congress passes long-awaited legislation. It's Friday, the 18th of July, and this is what you need to know. The US Congress delivered a watershed victory for the crypto industry on Thursday, passing its first major ruling for the sector. The bill creates a regulatory framework for US dollar-pegged tokens known as stablecoins. The measure was backed by Republicans and championed by President Trump and could bring legitimacy to a $265 billion market. But how did Wall Street react? Bank of America and JP Morgan described the digital dollar as a potential threat to the banking industry and warned that they're ready to respond. Fed Chair Jerome Powell has rebutted President Trump's accusations that he misled Congress over a $2.5 billion renovation of the central bank's headquarters. Powell said he did not inform government planners of changes to the project because they were not substantial enough. The new line of attack against Powell adds to Trump's recent criticisms of the Fed's ongoing decision to keep interest rates steady. Fed official Waller called for a quarter-point interest rate cut this month on Thursday, setting him apart from most policymakers. Our chart of the day is oil. Prices rose this morning after the European Union agreed to a lower price cap for Russian oil. EU member states agreed to the bloc's 18th package of sanctions on Russia over its war against Ukraine. Earlier this week, President Trump also threatened to impose tighter financial penalties on Russian energy, including nations that take its oil, including China and India. Our number of the day is 3.3%. That's Japan's core annual rate of inflation for June, well above the central bank's 2% inflation target. Speculation over the upper house elections this Sunday are in overdrive, and political uncertainty could prompt the Bank of Japan to delay further interest rate hikes. Opinion polls suggest that the ruling coalition party may fail to win a majority, but traders are betting that PM Ishiba will cling on to power. Our stock of the day is Netflix. The world's most popular paid streaming service continues to thrive as earnings beat expectations on every metric. Netflix raised its revenue forecast for the rest of the year thanks to a weakening US dollar and expectations for strong growth in new subscribers. But some investors were disappointed in what they saw as a conservative full-year outlook, problematic for a stock priced for perfection. And that's what you need to know this morning.